Good evening, ladies and gentlemen. It's such a pleasure to be back in Mumbai again with such a distinguished crowd and the audience. We'll be discussing the span of the next 22 years. We are now at 2025 and 2047 is 22 years hence. If we go back 22 years in our mind and look at what banking and NBFC space was and what it is today, it's a dramatic improvement, both in terms of how NPAs have reduced, how the business has grown, and what the future looks like. Undoubtedly, over the last 5-7 years, all of us have realized that the Indian banking system is perhaps the world's best in terms of managing its risks and, of course, now turning into a digital behemoth. On the floor, ladies and gentlemen, are two gentlemen, each with more than 35 to 40 years of experience in lending, and they head some of the biggest organizations in the NBFC and the banking space. I'll start with Mr. Sunil Mehta. He's the chairman of the PSB Alliance, which comprises of 12 public sector banks, a banker for the last 40 years. Mr. Mehta, 22 years from now, what will be the regulatory as well as technological landscape in which most PSU banks will operate?
I think you pretty well know that banking sector has seen a transformation from a brick and mortar manual system to first computerization, then for core banking, and for core banking, now the stage has come for a digital banking, and the payment space is almost reached to a level where we can claim that yes, most of our payment transactions can be handled digitally, and that gives a lot of comfort, maybe in terms of our number of transactions happening on a digital mode. We are leading the world. The UPI solutions that has been brought in by the entire financial infrastructure, that is bringing a lot of value for the last mile, but this is just the beginning. To go to the 2047, that's 100 years from the independence, Viksit Bharat. So Viksit Bharat, maybe in numerical terms you can say it's a $10 trillion economy, and then inclusive growth for all the individuals. But it requires a lot of transformation within the banking industry. The way, one thing I must admit, that banking sector has been very agile, has been adopting these changes, and that's why that public sector banks are now working with their fintechs, working with their peer group in private sector, and providing all digital solutions in most of these spaces. But the payment space, which has already been digitalized, now as our previous speaker has so, there the scope is in growing in volumes, like going to the semi-urban and rural areas and covering from 400 million to say another 400 million and 800 million. But now the lending space need to be digitalized, and that is one area which needs a lot of transformation.
Okay, and just the right person on the panel to talk about the lending space, Mr. Umesh Revankar is the vice chairman at Shriram Finance, India's third largest NBFC in terms of profit as well as top line, and of course when you look at the enterprise value at 2.9 lakh crores, here's a gentleman who's seen it all. Umesh ji, when you look at the lending that has happened or increased dramatically over the last 4-5 years, what are the major changes that you are expecting in this space thanks to digitization, thanks to increased availability of credit and a reduced cost of loans as well?
The way the industry has evolved in the last maybe 10 years, the changes have been quite dramatic. What used to be a typically physical mode of transaction has moved into predominantly digital mode of transaction. And this has happened mainly because of mobile penetration.
Yes.
Because even 10 years back, even though there were mobile, most of them had basic mobile. They did not have a smartphone. The introduction of smartphone has created a digital transition for each individual. So you can imagine everyone, almost everyone, making one digital transaction at any point of time, even in the rural area. not just forget the semi-urban area, because I was surprised when I went to one deeper part of Tamil Nadu, and there even the coconut seller for 40 rupees, there was a digital payment option.
I think the acceptance of digital payments at the lowest rung of the pyramid has been the highest in India.
Highest, yeah, that's one. See, that one part. And second, the ability to the digitize the contents and have a analytics of it, that really helps credit analysis. Now, is it deep enough? It is not deep enough, because many of the records what has been created over the last maybe 2 to 3 years, that may not be sufficient enough for making a credit analysis. But at least you are able to record it digitally and use it subsequently.
Absolutely.
So in the initial stages, I feel creating a algorithm out of it maybe too risky, because there is no enough track, or there is enough depth in the data. But going forward, it is going to become much easier.
Okay.
So next 4 to 5 years, the speed of transaction, speed of decision making, and right decision making will be much better than what it is today. So today I feel still it is shallow. There is not enough depth for making a credit decision. But recording part of it, yes, it has become much better. So therefore, the all credit delivery plus the other activity around credit delivery will become much better, and the NPA and NPA resolution both will be much easier going forward. So the credit cost has been coming down, and it will come down further is what I believe. And one of the reasons for the formation of NPA was the not only timeline, the churning of money was much slower in the past. And cash flow management for each individual was not that really great.
You were talking
They
about...
were not efficient. You see, individuals also were not very efficient.
So the velocity of money has gone
Velocity
up.
of money, ability to put it in the bank and remove it.
Yes.
Many times you would have carried cash without thinking of putting it in the bank. Today, moment you put into the bank, you can make a transaction out of it.
Absolutely.
See, that is creating the speed.
Okay.
And I think that with that, the NPA resolutions are becoming better. Individuals are becoming more efficient. Businesses are becoming more efficient and transparent. So all these things are happening. I think next 4 or 5 years are going to be very exciting for all the people, whether you are 100% digital or part digital.
Okay. Let's get Mr. Mehta into the conversation. Sunilji, you spent 40 years with Allahabad Bank, Punjab National Bank and Corporation Bank, and you have one foot in probably the most advanced, technologically superior NBFC in India, which is Jio Finance. Now, when you look at the technological platforms in the PSB Alliance within PSU banks, and of course this nimble elephant that we are talking about, what is the difference that you see in terms of addressing different markets? And more importantly, are PSU banks, how should I say, strong enough to move rapidly towards digitization on the lending side? The back end is now digitized completely.
So one thing, because I have been a public sector banker for all my career, and I can say the public sector banks are the largest repository of the public data, because the generations have dealt with them. Not only an individual, the generations have dealt with them. And the transaction data which they already have, and the the technology and the computation was adopted way back in 1989. So the type of data they have the ability to churn that data into the various credit products in time. And with this transaction data which is coming up in the forms of UPI and the various internet and mobile banking payments, that is creating a lot of footprint. Earlier, what person will used to do? He will withdraw 10,000 cash, and then where he spends, there was no footprints available. Today, The person loads 10,000 in his wallet or in this account, and then how much he spends on grocery, how much he spends on a movie, how much he spends on eating outside, that can be segmented. So that provides a predictive behavior of a person, and the transaction analysis can give a lot of scope for refining the expectation of a customer for the different banking product. So the transaction data which is now made available through this UPI platform, because there is a subdivision of the, because smaller, as very rightly said by even a coconut vendor is accepting digital payment. So this classification of the spend of an individual provides a lot of data for customizing and creating the digital lending products, and which can be serviced through the straight-through processes. So public sector banks are now gearing up. They have already taken a big call in adopting some of the major technologies. I think one of the SBI Chairman Kharaji is sitting here, so and these type of solutions which they have come out in the mobile banking. All these things are providing one-stop solutions digitally for providing the embedded journeys into the various lending products. So I think this public sector banks are going to take the benefit of the historical data. They are adopting the technologies, and that is one area where the technology is helping the banks is making a predictive model, creating early warning signal, and making a pre-approved loan products through the straight-through processes. Those things have already been adopted. Now the number of products which will be brought under this category will go up in times to come.
Okay, perfect. Let's get Umesh into the conversation. You are amongst the most nimble of NBFCs. When you look at your future in terms of planning the next 3 or 4 quarters, where does digitization stand? Let me remind you, ladies and gentlemen, the trailing 12-month profit number for Shriram Finance is 9,440 crore rupees. It essentially translates into 1 crore rupees per hour. So Mr. Revankar has spent 1 hour here. His company has made 1 crore rupee profit. Now, 5 years hence, when you look at the digital landscape within Shriram Finance and within the borrowing and lending community, how do you see Shriram Finance benefiting?
See, the major thing which any finance company or any NBFC or banks, everyone would be looking at is how to take higher share of customers' wallet or revenue. See, that's where everyone is looking at. So one is you have a customer base, how to provide him multiple services. So not just lending. Lending alone may not be able to give you the kind of profit growth. The next step of profit growth will come from the services what we offer, and how quickly we offer, how better packaging we do to the customer's need. So that is most important. So I think, so what we need to do, for everyone for that matter, whether it's bank or NBFC, everyone has to keep holding their customers and give them additional services. And that's where the challenge is. And I think digital is something is helping us a lot. In fact, we have Shriram One app, which is a super app that gives him 360-degree of all the products and services we offer as a company and as a group, because we are also in the insurance business. So we intend to really deepen that. Right now, our customers have digital handicap. In the sense, I have to bring him on the digital platform and introduce him to digital transaction. He's on his own, doesn't get into digital transaction automatically. Many of my customers, I have to do that. So that is a physical effort required in making the customer, making a transaction on the digital platform. So it is a habit. It takes time. Once that happens, then probably customer will be able to get a better service out of it. And also our ability to earn additional fee income from the same customer will increase.
Okay. This is a question to both gentlemen. To you, Mr. Mehta, first. As the chairman of the Public Sector Banks Alliance, you are also responsible for the technological leap that these banks have taken in the past 15 years and of course hence. Do you think that the branch network that these banks enjoyed over the private banking space is still as relevant as it was a decade and a half ago, or are the days of physical setting up of branches over, and will everybody shift to digital in the PSU landscape as well?
So I think you must have heard our previous speaker, Mr. Gunit Chadha, speaking about the next phase of achievement will be when the entire rural and the semi-urban area gets totally digitalized, and that space will require still a long period of time. So till that time, the phygital banking will be the need of the country, and as rightly said by Mr. Umesh also, that even these journeys are digital. For payment space, for digital space, still you need the assisted journeys. You need hand-holding of the people. You need a BC to assist a borrower in filling up an application, maybe on a Jan Samarth portal or any of the portal. So Jan Samarth I'm doing because that's being managed by PSB Alliance. So similar type of portals which are linked with the government. So these type of portals, if you have to fill up, you need somebody to assist them. So till that we reach to a level of literacy, not only the literacy in terms of the education, literacy in terms of financial literacy, where they understand the cyber risk, where they understand the impact of it, I think we will have to continue the journey as a phygital. So public sector banks have got a large branch network, which gives a lot of confidence to the customers living in the rural semi-urban area, because the seeing is the belief. They believe that yes, this infrastructure, if they have some problem, we can still go them and approach them. So I think the journey is on, especially in the metro and urban. Adoption is digital more. Gradually is expanding into the semi-urban and rural area. The footprints are going up, but till the journey is complete, the physical structure will be relevant. Now you say that what the infrastructure can be leveraged in future. So tomorrow when the journey becomes digital, as rightly said by Mr. Umesh, the bankers will have to diversify from their traditional banking model of deposits and lending to the service model, wealth management model, insurance advisory models and all that. And that differentiation is going to happen in times to come, where every bank will have a niche areas where they will create their niche abilities, and the existing physical structure will be needed for counseling, for providing hand-holding, for wealth management services, for advisories, and for different type of various financial products and services. So the nature of services will change, but the physical structure will be the need for a country, maybe because of the diversified demographic situation we have.
Okay. Umeshji, as an NBFC, you are the last mile between public sector banks, borrowers such as MSMEs, and of course even retail borrowers. When you set up the medium-term game plan or expansion for Shriram Finance, where is digital in terms of expansion, and where is the physical branch expansion that you used to think maybe a decade ago?
See, we still adding more branches. We are adding around 200 branches in a year. We have 3,000 branches. We are adding 200 branches. Is it necessary when there is advancement in the digital, when you have all the customers are having, most of the customers having mobile? If you ask me, it is still necessary because there are certain activities, certain lending which needs a physical presence and also access to customer. When you create access to customer, then you have to be within a certain kilometer range. You cannot be in a remote place and operate. You cannot have a faceless organization in India, I believe, because as per the RBI data, nearly 30% of the bank accounts have zero balance. That means after opening a bank account, many people are not operating even today. So that is the data we have. That means one is the awareness on banking operation is less, or they would have opened a bank account just to receive some government money and they would not have operated after that. That also is there. So we need to look at it, one. And the second is, there is something called underbanking. One is unbanked, and underbanking is where you don't get timely service for the purpose for which you want a credit or any other thing. So that is something which I think non-bank have been playing a gap. If you look at non-banks credit today is around 20% of the total credit, which has moved from around 11-12% to 20% over the last 10 years. That means non-bank have been growing faster on the credit than the banking system, because we are trying to bridge that gap, and that gap still remains even in advanced economy. Even in the US, I was told, there is around 20% of the people do not have proper banking or access. So I think that will continue to remain, and we need a physical operation for creating that awareness and offering that product. And as I was telling you, the physical presence and being a financial partner to small enterprise is important. We are missing the line when we talk about full digital, that being a financial partner and being an advisor to the customer is something a banker or financier has to do. That part we are totally missing, because there has to be human behind any particular relationship. So that, I think, is where the NBFCs and to some extent public sector bank have been offering over the period.
Okay. I'd just like to quote the economic survey, the one which was revealed on 1st of February. It says, the banking and finance sector remains stable and well capitalized and is catering to the financing needs of the economy and the country. Yet about 15 months ago, one of the biggest issues that was raked up by the RBI was this growth in unsecured loans, both personal as well as the other loans that we are talking about. Now, that is primarily, I believe, because of digital lending. I may be wrong, but that's my understanding. We've talked about all the positivities that are there as far as the broader economy is concerned, and how fintech and how digitalization has expanded the banking sector. What are the pitfalls, Mr. Mehta?
So if you're talking about the RBI guidelines, I think that has emanated from certain data which was received by them, that there was a multiple financing into the smaller personal loan segment. Multiple financing on the personal smaller loan segment, because that is one area where most of the multiple financial institutions were lending to the same person, and they were leveraging it, utilizing that money, maybe for paying off for certain...
and we couldn't have nipped it unless we were digital.
Yes.
Right? So that is the key.
So everything, like if you drive with the speed, the chances of fatalities are always more. So there is always a risk-return trade-off. There are certain conveniences. Just because risk is more, you can't stop going to a flight because I'll just walk down because there is a risk of a flight crash, so I will not go for a flight. So certain amount of calculated risk will always exist in any line of business. And with the passage of time, when any issues come up, these systems get redefined, and the processes are built in, and we have a very strong regulator which collect the data from the various sources, and they come out with the prescription which are indicative in itself that this is a space which is heating up, maybe because of the multiple digital lending platforms available to a person for a smaller personal loan, and they are not vouching it. But that has brought in the role of the credit information companies. Now the banks have started relying on more data and the centralization of the data, and the centralization of the data will provide that support in eliminating those type of multiple financing. So I think this is a signal to the entire financial sector that lending to unsecured loan without going to the details of the credit scores, without going for this understanding the centralized data, can be risky in times to come, and that's why the higher provisions were prescribed. So every opportunity throws up challenges, regulator comes out with prescriptions, and the system reforms. But the journey is on, and it will grow.
Okay, Mr. Revankar, when you look 5 years beyond, either thanks to foresight or market action, or maybe some good advice coming in from bankers who've seen more than 40 years of business, who do you think will be the eventual winners and losers in an economy which 15 years from now, 18 years from now will be $10 trillion in size?
Say, I can't forecast who will be the winners or losers, but I think in a good economic condition scenario, there has to be a win-win situation for everyone.
Hmm.
So that is the ideal situation. So somebody trying to win on and somebody's loss, that may not be that means the economies are not really balanced. So I think all the institutions which have come with some purpose for making a service or making a business with the community, everyone need to win, is what I feel.
Okay. My final question to you, Mr. Mehta, our time is up. It is often said that the fintech part of RBI is perhaps the best in the world. At this moment, are we over-regulated within the digital financial landscape, or are you convinced that we are fairly on an even keel when it comes to oversight by RBI? Could it be better? Could it be slightly less?
I think our regulator is adopting a very gradual approach. They have created a sandbox approach for fintechs to get embedded into the financial sector. They have created a RBI innovation hub where the innovations are encouraged. The lenders and the banking system is permitted to collaborate with the fintechs for adoption of the new technologies. And of course, they do offer a word of caution even while dealing with the fintech, that what you can outsource, what you cannot outsource, the data sharing, the DPDP bill. So I think it's a very, very regulated but permissible environment where the innovation can happen. And I think this particular landscape is permitting, and that's why the country could take a leapfrog in the matter of digital adoption. So this approach adopted by regulator is very good. I think this need to be continued, and the same is being done in case of adoption of the new digital product, because without innovation, without encouraging fintechs to go for cheaper solutions, the better solutions, the banking system cannot benefit, the speed and efficiency cannot be brought it. Again, everything is fraught with the risk. Certain amount of risk is there, but just because the risk is there, if you don't adopt those innovations, don't take those challenges, then nothing will improve. So I think this is a time the country is really geared up to adopt the revolution in the financial sector, and the ecosystem is facilitating it, including the regulator and the government.
Okay, ladies and gentlemen, risk hai to ishq hai, aur agar ishq hai to aage zindagi bhi hai. Thank you for such a wonderful conversation. I hope you enjoyed it as much as I did. Thank you.